partners capital and new partners profit sharing ratio. Yes.
Yes, sir.
Okay. So what we do, we multiply the new partners capital with their reciprocal of share. Yes.
Yes, sir.
Okay. So when we multiply the new partner's capital with the reciprocal of his share, then we get the total capital of firm. And now in total capital in firm, there is three partners. Okay. The old one, not three, it may be four or five. So there are partners. We include old partners and new partners because all of them are partners now. Okay, so this proportionate capital is related with every part, the
Okay,
old one
sir.
and new one. So that's why we include new partners capital in adjusted capital also.
Okay, sir.
Okay.
Sir, and also while we are passing the journal entry for the distribution of goodwill, so do we distribute it among the partners in equal ratio?
The goodwill distribution?
Yes, sir.
No, actually, goodwill is distributed in sacrificing ratio.
So if it's not given in the question.
No problem. Okay, it is not given in the question.
Yes, sir.
And then what is your new ratio and sacrificing ratio? You try to calculate that.
No, sir.
Which question can you tell me?
No, sir, in the hidden goodwill questions only, sir.
Okay. Yes, hidden goodwill question. Question number 1, 2, 3, 4, 5. Total 5 question.
Yes, sir.
So which one?
So for example, we solved the fourth question in class, and in that we distributed the goodwill among partners in equal ratio.
In equal ratio. Okay. Actually, X and Y are partners with capital of 50,000 each. They admit Jed as partner with 1/4 share in the profits of the firm. Jed bringing in 80,000 as his share of goodwill. The profit and loss account showed a credit balance of 40,000 as on date of admission of Jed. Give necessary journal entries to record the goodwill. Okay.
Yes, sir.
So the goodwill brought by Jed is not given, but we have to calculate goodwill. We have to journalize the goodwill. So Jed is bringing 80,000 as his share of capital, and 1/4 is, so it is 3,20,000, and we have distributed this 40,000 in these two. So 1,40,000 plus 80,000. So total is 2,20,000. Yes, goodwill is 1 lakh. Okay. And in this goodwill, the share of Jed is
1/4.
1/4. So 25,000.
Yes, sir.
And we distributed this 25,000 in equal ratio. So you think that we always distribute goodwill in equal ratio in case of hidden goodwill?
Yes, sir.
Okay. No, actually, we don't distribute the hidden goodwill or any goodwill in equal ratio, because old
So your stuff.
Hello, Ritika. Am I audible?
Yes, sir.
Okay. Actually, some network issue. Just wait 1 minute. Okay. So I was saying that goodwill is always distributed in the specified ratio, like existing goodwill is written off in old ratio and the new goodwill or valued goodwill is distributed in their sacrificing ratio. Okay, there is no other concept related to goodwill. We have to do this always in retirement, in death of partner, in change in profit sharing ratio, or in admission. These two concepts apply everywhere. Okay.
Okay, sir.
So in this question, why I distributed the goodwill in equal ratio? Because there is no old ratio given in the question. Yes.
Yes, sir.
And if old ratio is not given, then what we assume? Yes. You
There
don't
is
remember?
there is it given distributed equally?
Yes. If it is not given or it is not mentioned in partnership deed, then we distribute the profit equally. Okay.
Okay, sir.
So in this question, profit sharing ratio is not given. That's why we assumed it as equal. And if the old profit sharing ratio is equal and there is no information about new ratio or sacrificing any ratio, then we also assume that sacrificing ratio is same as the old ratio. So old ratio is equal. That's why sacrificing ratio is also equal.
Okay, sir.
Okay. Is there any other question you have?
Sir, in the homework, so question number 1, 3, 4, and 5 all will be distributed in equal ratio only, right? Because there is no information given about all ratio.
Yes, yes, that's why.
So could you solve the second one and show?
Yes. Bhuvan and Shibam were partner in a firm sharing profit in the ratio of 3:2. Okay, so that you uh, can confirm that we don't distribute the goodwill in equal ratio. Yes.
Yes, sir.
Okay. So you can see the OneNote.
Yes, sir.
And you can also see the question here.
Yes, sir.
Okay. So their old profit sharing ratio is 3:2. And their capital is 50,000 and 75,000. They admitted Atul on 1st April 2013 as a new partner for 1/4 share in the future profits. Atul brought 75,000 as his capital. Value of goodwill of the firm and record necessary journal entry for the projection on Atul admission. So in this question, what will be the sacrificing ratio? Can you tell me? Sacrificing ratio.
So please show the question.
Yes.
There is a 3:2 only.
It is 3:2. Yes, it is case one of change in profit sharing ratio when we have to calculate new ratio or sacrificing gaining ratio. So in this case, the sacrificing ratio is same as the old ratio. So our sacrificing ratio is 3:2. Okay.
Yes, sir.
Okay. Now, Atul brought 75,000 as his capital. Calculate the value of goodwill of the firm and record necessary. So 75,000 for 1/4 share. So total proportionate capital. Total proportionate capital will be 75,000 into 4, or you can say 4 by 1. So it will be 3 lakh. Okay.
Yes, sir.
And after this, the adjusted capital, there is no adjustment given in the quotient. So adjusted capital will be total of these 3 capital. So total adjusted capital will be 50,000, 75,000 and 75,000. 50,000 plus 75,000 and plus 75,000. So it is 2 lakh. Okay.
Okay, sir.
Now, in this 2 lakh, goodwill of firm will be total proportionate capital, that is 3 lakh minus actual capital of old and new partners. So it is 2 lakh. The goodwill is 1 lakh for the firm. And share of Atul, it will be 1 lakh into 1/4. So 25,000. Now, sacrificing ratio is 3:2. So distribution of goodwill. $25,000 into 3/5 and 25,000 into 2/5. It will be 15,000 and 10,000. Now you can pass the journal entry. It will be cash account debit to Atul capital 75,000, and then Atul capital account debit to Bhuvan and Shibam. Bhuvan and Shibam account. So the goodwill amount is 25,000. It will be 15,000 and 10,000. Is this clear?
Yes, sir.
Okay, so this is our solution. Now you can see here that goodwill is not distributed in equal ratio. So in any situation, there is only 2 ratio that is used for distribution of goodwill. For existing goodwill, it is old ratio. For valued goodwill, it is sacrificing or gaining ratio.
Okay, sir.
Okay. Do you have any other question?
No, sir.
Okay. So goodwill part is completed. Next is a revaluation. A revaluation of assets and reassessment of liabilities. Do you remember this concept?
Yes, sir.
Okay. Can you tell me the journal entries for revaluation? Actually, how many entries are there?
Uh, so I don't remember it that well.
Okay. Do you remember any of the entry?
Mm,
Not sure.
okay.
Okay. So let's start with the beginning, because actually, if you could remember one or two entries, then we will start from there. But let's start from the beginning. Okay.
Okay, sir.
Okay. So you can see the screen. Can you tell me what is a revaluation account and why it is prepared?
The revaluation account is prepared to record the difference between the revalued, between the original value of an asset or liability and its revised value.
Okay. So why it is required to calculate profit or loss on revaluation?
So to see the changes that's happened during an accounting period, the increase or
During
decrease.
an accounting period? No, actually, uh, there is certain things that increases and there are certain assets which decreases. Okay. So revaluation. Now, over the time, if you, let's say, start a business here on 1st April 2015, you started your business here and you go here. It is 1st April 2023. Okay.
Okay, sir.
Now, if you started your business here, then on this date or nearby this date, you maybe have purchased many assets. Yes.
Yes, sir.
Let's say land and building, plant and machinery, and there is stock, or any other assets. Now, after 8 years, that is from here to here, is there will be any increase or decrease in the value of these assets?
Yes, sir.
What do you think? Which assets will increase and which assets will decrease?
The land and building will increase.
Land and building will increase. Okay.
The plant and machinery will decrease.
Okay.
The stock will decrease.
the stock value will increase generally, because with the time, generally, a product becomes costlier.
Yes, sir.
Yes, the notebook I have purchased in 70 rupees in my time. It is now worth 140 or 150. The same note. So generally, stock price increase because the product you purchased has effect of inflation on it. So that's why. Okay, now land and building will increase. So let's say it becomes 15 lakh here. The machinery becomes 6 lakh here, and the stock becomes 14 lakh. Okay.
Okay, sir.
So there is 5 lakh increase in land and building. There is 2 lakh decrease in plant and machinery, and there is 7 lakh increase in the stock. Yes.
Yes, sir.
Now, let's say at the time of starting the business, there was 3 partners. There were 3 partners, A, B, and C, and now a new partner, D, is admitted into the firm. Okay.
Okay, sir.
Now, just tell me, leave the A, B, and C. Just tell me that this profit on 1st April 2023, this profit is calculated. Yes.
Yes, sir.
And D is admitted on 31st March 2023. That is 1 day before revaluation.
Okay, sir.
Tell me, he will get the share in revaluation profit or loss or not?
Sir, he won't.
He will not get any profit or loss.
No, sir.
Why do you think so?
Sir, because all these profits are due to the activities of the old partners, and his contribution was not there, so he will not get.
Yes, D is admitted on 31st March 2023, and after 1 day it is revalued, and these profit or loss is related to past. Okay, and there is no effort of D in past for the firm. That's why these profit will should not be distributed between all the partners. It should be distributed between A, B, and C only, not D. Okay.
Yes, sir.
But there is no devaluation on 1st April 2023. But if the revaluation is done on 1st April 2028 now, okay, he is admitted on 31st March 2023, and now we are doing the revaluation on 1st April 2028, and the same increase and decreases there. We have not done the revaluation on 1st April 2023. We have done the revaluation on 1st April 2028. Now tell me, will D will get any profit share in these profit or loss?
So he will.
He will. Okay. And why your answer is changed now?
So because by the time of 2028, his contribution will have also been there. So he deserves his part of the profit.
Okay. So he should share the part profit in this. Yes.
Yes, sir.
Okay. So you are saying that we will not give the full profit share to D in this profit. Yes.
Yes, sir.
Okay. So how we will decide that how much profit we have to give to D?
So we have to calculate from the day of his admission till when it is revalued.
And if I say to you that these increase are up to 1st April 2023 and there is no increase or decrease in these assets after 1st April 2023, is your answer will change.
Yes, sir.
Okay, so what will be your answer? That they
They
will
will
not share.
Yes, sir.
Yes, yes, very good. So these are simple situation. Okay, there is no accounting concept here. It is a simple business here. Okay, everybody thinks in the same manner that D is admitted on 1st April 2023, so he will not get any share in profit before that time, and he will get share in any profit or loss after 1st April 2023. Yes.
Yes, sir.
Okay, but there is a problem, little problem here. When we will distribute this profit, the net balance is actually 10 lakh. Yes. 5 plus 7, 12 lakh minus 2 lakh, 10 lakh it is.
Yes, sir.
Okay. But ABC decided not to distribute this profit on 1st April 2023. They want to distribute this profit in 1st April 2028. And you told me that in this profit, they will not get anything. Yes.
Yes, sir.
But in future, on April 2028, he will get share in this when we will distribute this profit in April 2028. So let's say every partner is distributing equally. So A, B, C, and D will get 2,50,000 each. Now, is your answer incorrect here?
Yes, sir.
Okay. So why do you think that it is changed? It is incorrect.
Because even D gets a share in this profit.
D is getting share in this profit. Actually, we are paying D in future, but he is not getting any share. Your answer was correct.
So why are we
Confused?
paying? Yes, sir.
Yes. Actually, there is two types of situation we have. First, when we distribute the profit on 1st April 2023, and there is no adjustment required in future. The second thing is when we don't want to distribute the profit here. Okay, we don't want to distribute here. We will distribute when the firm will shut down. Okay.
Okay, sir.
So at that time, we know that we cannot ignore D. So we have to pay D this much amount, 2,50,000. Okay. So what will happen here that on 1st April 2023, we will say to D that you will get 2,50,000 in 2028 or in future anytime. So you should share this, you should give this back to us right now in April 2023. You understood the concept or not?
Yes, sir.
So D is getting 2,50,000 in 2028. So we will say to him that this is not your profit, but you are getting this. You are getting 2,50,000 in 2020. Okay. So this 2,50,000 you have to give us back right now in present in April 2023. Okay.
Okay, sir.
And he will give this profit to the old partner in their sacrificing ratio. Okay.
Okay, sir.
Because A, B, and C will give this 2,50,000 from their profit to D. Yes?
Yes, sir.
Yes. So D will give in the same ratio, they will give ABC the share in this 2,50,000 back to them in their sacrificing ratio. Okay.
Okay, sir.
Now, do you have any question in this background of the revaluation concept?
So this amount which the new partner has to pay back during his admission, how is that value determined?
Because we revalue the assets and liability in April 2023.
So the one share of from the profit is the value he has to pay back.
Yes, his profit share will be paid by him to the existing part.
Okay, sir.
So whatever he will get in future, he has to pay back, right?
Okay, sir.
Do you have any other question?
No, sir.
But there should be one question here, that why we are doing this. If he's paying us right now, then why that we don't share the profit to him in future and he don't have to pay back? Yes. Okay. You didn't listen the words?
I did, but I didn't understand properly.
Okay. So there should be a question that why we are giving this profit share to D in future if he has to pay this amount to us right now. We can avoid these two calculations by not giving his profit, his revaluation profit to him in future.
Yes, sir.
Yes.
Yes, sir.
So what do you think? Why we are paying him 2,50,000?
So maybe because of his work in the coming years.
No. You know, this profit is related to past. His work in coming year is not considered for this distribution.
Yes, sir.
Actually, we are distributing this profit because we don't know that how much the value of assets will be in future. So in future, we have to just distribute all the profit. Yes.
Yes, sir.
Let's say, let's change the situation a little bit here, that in 1st April 2028, the value is 20 lakh of land and building. Let's take the combined number. Okay. Here it is 10 lakh net profit. Now in future, it becomes 20 lakh. Okay. In April 2023. So there is increase of 10 lakh. Yes.
Yes, sir.
Now, there can be a calculation here where we will distribute this 10 lakh between only A, B, and C, and this 10 lakh in A, B, C, and D also. Yes.
Yes, sir.
But this is not suitable. Okay, it is not good for accounting. So what we do, we just distribute this 20 lakh between A, B, and C, and D. So they all will get 5 lakh each.
Yes, sir.
Yes. And in this 5 lakh, 2,50,000 is related to profit which is earned before 2023. Yes.
Yes, sir.
That's why we don't have any option to distribute this separately. So we are distributing this 20 lakh combinedly with the past profit also. So D is getting 2,50,000 extra. That's why he has to pay us for A, B, C right now in 2023.
Okay, sir.
Is this clear?
Yes, sir.
So this is actually the whole concept of a revaluation. Okay. In change in profit sharing ratio, we just have to cover this part, only first part in detail. The second part is not in detail there. That's why I have explained it here. Now, the theoretical concept. This is the background of revaluation, why we do this, and what is the benefit for this, and why these accounting treatment is required. So you can see here, profit or loss due to increase or decrease in value of assets or liabilities is past profit. Therefore, it should be distributed between old partners so that new partner don't get any advantage or doesn't have to bear any loss. Okay. We don't want to pay any profit to new partner or any loss to new partner also. Okay. So it should be distributed between existing partner. Okay.
Okay, sir.
Okay. Now, there are two types of condition given in question related to revaluation. The first one is when assets and liabilities are required to be shown at revised value. Means the first concept where we distributed the profit in present. Okay.
Yes, sir.
It is present distribution. And the second case when assets and liabilities are required to be shown at book value. So now it is future distribution, means we will distribute the revaluation profit or loss in future, but the new partner will get some extra benefit due to this. That's why he has to pay that extra benefit to the existing partner right now.
Yes, sir.
Okay. So actually, this background I just told you, it has no use in solving the question. Okay. It has no use in theoretical or practical question. It is given to understand the concept. Okay. So if you understand all the background concept, then it is okay. If you don't understand, you can ask question, but don't be in tension that if you don't understand how you will solve the question. It has no impact on solving the question. Okay.
Okay, sir.
Okay. The next thing. So tell me exactly, you understood the concept or it is confusing?
No, sir, I understood it.
Okay, good. So the first case here, when assets and liabilities are required to be shown at revised value, you have to write the concept or take the screenshot or write.
Sir, I took the screenshot.
Okay. So when assets and liabilities are required to be shown at revised value, means we are distributing the profit or loss on revaluation in present. So in this case, all the assets and liabilities are revalued and profit or loss on revaluation is distributed between partners in their old profit sharing ratio. So in case one, when we have to distribute the profit or loss, we have to close the revaluation account. We distribute the profit or loss of revaluation in old ratio. You have to remember this. In first case, where we have to show our assets and liabilities at revised value, when we have to show the effect of revaluation in our book, then we will distribute the profit or loss on revaluation in old ratio.
Okay, sir.
Okay. Now, revaluation account is prepared to calculate profit or loss due to change in value of assets and liabilities. Now, journal entry for increase in value of assets. So these are the entries, and on the basis of these entry, we prepare the revaluation. Okay.
Yes, sir.
Okay. So actually, you don't remember the journal entry, but after seeing these journal, the first for increase in value of assets, for decrease in value of assets. You understood the reason behind the journal entry? Can you explain it to me? First entry. Read the first entry.
For increase in value of assets, asset account
Yes.
debit to revaluation account.
Okay. Can you tell me that this assets is debited here? Why?
So because there is increase in the asset, they are debiting it.
You have sent the solution of hidden goodwill.
And so I sent it a while back. I think they just forwarded it to you.
Okay, so you use CAM scanner app.
Yes, sir.
There was a report in past that it get your personal data and use it in different.
Your voice is breaking.
I'm saying that CAM scanner app is, you can say it take your personal data. It is not good application.
Oh,
Okay, you can use Adobe scan.
okay, sir.
Okay. Now you have asked all the questions, so I don't think there is anything I should explain here in the question part.
No, sir.
So the first entry, yes, for increase in value of assets. Assets account debit to devaluation account. Can you repeat that why asset is on the debit side and revaluation account is on the credit side?
So because increase in assets, there's increase in assets, so we are debiting asset account. And
Yes. Actually, a revaluation is a nominal account. Okay.
Yes, sir.
So whenever there is profit, it is on the credit side. Whenever there is loss, it is on the debit side. So when value of asset increased, it is profit for us. That's why revaluation is credited.
Okay, sir.
And for decrease in value of assets, when the asset value is decreased, it is loss for us. So revaluation account is debited.
Okay, sir.
Okay. Now, the next thing is these entries. The same concept applicable here. For increase in value of liability, liability is increased. So liability increase on the credit side, and there is a loss. So revaluation account is debited. So revaluation account debit to liability account. For decrease in value of liability, liability account debit to revaluation account. For unrecorded assets account debit to revaluation. Unrecorded assets are also profit for us because we don't know that there is some assets we have and it is existing actually. Okay, we find out just right now that we have some assets worth any amount.
Okay, sir.
And for unrecorded liability, it is revaluation account debit to unrecorded liability because it is a loss. Now, after writing all these entries, there will be one more entry for distribution of profit or loss. So entry number 7 or 8, we have to pass any one of these two. If there is profit on revaluation, then there will be no loss. If there is a loss on revaluation, then there is no profit. Yes?
Yes, sir.
Okay. So for profit on revaluation, it is revaluation account debit to partners capital. And for loss on revaluation, it is partners capital account debit to revaluation. Okay.
Okay, sir.
So these are the journal entry, and this is a revaluation account. So you can transfer all the entry here. Account will be prepared.
Okay,
So
sir.
this is our revaluation. Now, if we see the portion of this, you have to understand one thing, that there is two types of adjustment or additional information given in portion. Two types. When there is increase in any assets, and it is written like this: the asset increased to this amount, or asset increased by this amount. So is there any difference between these two lines?
Yes, sir. So the
Can you tell
first
me?
case, it's giving the revised value of the asset. It's increased to this amount. The new amount.
Realized value?
Yes, sir.
Actually, we are not selling assets here. Yes,
Asset.
we are not selling the assets here. We are just estimating the value of that assets.
Yes, sir.
Okay, so we cannot say it is a realized value. If you want to say it is a revalued of.
Yes, sir.
Okay, now tell me.
And in the second case, so it's showing the change in the value of the asset.
Yes. In first case, it is new value that is given. Means if the asset value is 50,000 and it is said that the value increased to 70,000, it means there is an increase of 20,000.
Yes, sir.
Because old value was 50,000 and new value is given 70,000. So increase to means there is new value given. Now, the second situation where increase by is given. So it means there is change in value given in portion. Okay, old value is given in balance sheet and change in value is given in additional information. So you can easily calculate the new value by adding these two information given. Okay.
Yes, sir.
So again, it will be like the old value was 50,000 and it is increased by 20,000. So we will add 20,000 plus 50,000, 70,000 it is.
Yes, sir.
Okay. Now tell me, in journal entry, which amount is written, the old one, the new one, or the change in value?
So the change in value.
Okay. Yes, it is correct. In journal entry or in account, we only write change in value. Okay, we don't consider the old value of any assets or liabilities, and we don't consider the new value of any assets or liabilities. We just use these two information to calculate the change in value, because we are calculating profit or loss due to change in value of assets or liabilities. That's why we only consider the change in amount or change in value of assets.
Okay, sir.
Okay. Now, if there is a revaluation loss, or you can say that, yes, if the balance is on the debit side, or if the balance is on the credit side, then what it is profit or loss.
So if the balance is on the debit side, it's loss. And if it's on the credit side, it's profit.
Why do you think this? The rules of debit credit, the nominal account.
Yes, sir.
Yes, generally, the student consider the revaluation, but this is not a simple case here. This is a transfer entry.
Yes, sir.
Okay. Let's say on the credit side, we only write profit. Yes.
Yes, sir.
Because increase in assets is here, decrease in liabilities here. So all these are profit for the firm. Okay.
Yes, sir.
And on the debit side, this is all loss. So if there is loss of 60,000 and profit of 90,000, then what it is? Profit or loss?
So profit.
Yes, profit.
So profit.
Yes. So if credit side is more than debit side, then the balance will be on the debit side.
Yes, sir.
And it is
Profit.
profit. Again, if debit side is more than credit side, then the balance will be on the credit side and it is loss. Is this clear now?
Yes, sir.
Okay. One more thing. You can also find out it is profit or loss by transferring it to capital account. Now tell me, this balance on the credit side will be transferred to capital account on which side? Debit or credit?
So which balance?
Which side the profit or loss will be transferred? If the balance is on the credit side in revaluation account, then on which side it will be transferred to capital account?
The debit side.
Debit side. So capital generally increase on credit side and decrease on the debit side. Yes.
Yes, sir.
So profit will increase the capital and loss will
Decrease in capital.
decrease the capital. So if it is on the debit side of capital account, then it is loss.
Yes, sir.
Okay. So transfer entry, in transfer entries, actually, we don't apply these rules. Or if you want to apply the rule, the concept will be, it is profit for the firm. Yes.
Yes, sir.
And we are distributing it between partners. So profit is reducing. Yes.
Yes, sir.
And on which side profit decrease? Profit, capital, and liabilities increase